this in perspective now. Carla Slim is economist for the MENA financial markets at Standard Chartered Bank. Joins us now in the studio. Morning, Carla.
Good morning.
Okay, first of all, let's look at the bigger picture of the Trump tariffs and what it means for the global economy. And then we'll drill down into MENA. I was reading a recent Standard Chartered report a couple of days ago, and the word I picked up on was stagflation warning from you and your colleagues. What's the bigger picture?
Absolutely, Richard, and thank you for having me again on the show. We're really trying to identify first what this means for the global economy and globalization secondhand before we can identify and determine how it translates for the regional economies. At a global level, we do expect that these tariffs and the uncertainty around the tariffs is going to likely take away from US growth in the first hand. So we identify about 0.5% percentage points shaving off of US growth. And we do expect that the tariffs should be inflationary. So this is why, and these are the reasons why we've underpinned these developments as potentially risking stagflation for the US economy. We think we are still a few standard deviations away from recession risks. Many market players out there have started using the R word. We don't think we're there yet. We think it's really a risk of stagflation for now, and globalization will likely adjust. So we don't think this is the end of globalization. We think globalization will change, it will adjust, and we're really trying to focus on fast growth trade corridors to identify some opportunities for regional parts and regional economies.
Okay, fine. You're based in Dubai. You're an economist for the MENA region. What does it mean for us?
So when we look at MENA macro specifically, and we look at how the global markets have behaved specifically yesterday, the first thing to identify and the first element to identify is oil prices. We've seen a lot of volatility on oil markets. The oil markets are really pricing in global demand concerns on these stagflation risks and on these fears of recession and of a slowdown in the global economy, whether this is stemming from the US or from Asia, because we know that Asia is likely to be the region that is the most impacted from these tariffs and this uncertainty. And then we also had OPEC coming out and tripling their supply increase. So these two factors together have contributed a double whammy for oil prices, and the uncertainty around oil prices is weighing from a macro perspective on the MENA economies. But fundamentally, when we look at our economies and trade specifically, we actually don't have that much exposure to the US. If we quantify it, US imports from the region is only $40 billion, half of which is oil, which is not in scope for tariffs. So the other half, only $20 billion, is what's at stake or at risk from being tariffed essentially to the US. So it's really a very small number when we talk about trillions and trillions of dollars of non-oil foreign trade for the region.
Yeah, and if we look at the comments yesterday from Thani Al-Zayoudi, the UAE trade minister, standing up in Abu Dhabi giving a speech, doubling down on the UAE's commitment to free trade, on its commitment to these SEPA trade deals. What did you make of that?
Essentially, what we make of it is that the UAE is trying to grab a larger market share during these volatile times. So I think most analysts out there do expect that with lower global growth, we should expect lower global trade growth in volumes. That's tend to be a correlation there. But even if we expect lower volume growth, we can expect the region, the UAE and the GCC, to try to grab a larger market share as the trade corridors shift to the advantage of our region. So we know that intra-emerging markets, so trade between emerging markets, has been growing anyways. It now constitutes half of global trade in the global economy. And Middle East and Asia are at the heart of this. And it's really not just trade. It's investment flows, financial flows, flow of people, remittances, and labor and tourism as well. So it really has implications through all economic segments in our economies.
Could I bring in my colleague, Carla, Georgia Tolley? Georgia, you were speaking to Amit Damani of the Damani Jewellery Group yesterday. That's exactly what he said. He thinks this is an opportunity, right?
Yeah, he wants to bring manufacturing here because he figures that the Asian countries, their trade, the tariffs are going to be so high that actually with only 10% here, it looks good for us, and therefore it's an opportunity to bring more jewellery manufacturing ultimately into the country.
We couldn't agree more at all levels of the economy, in the sense that the trade corridor between Asia and the GCC is one of the fastest trade corridors in the world. It has a long-term growth average of 15% when we look at the sort of 30 to 40 year average, and it transcends just trade. It's non-oil trade, oil trade, investment flows, financial flows, and flow of people, essentially. So we think at every level of the economy, we're going to see implications. We had anyways had a structural shift where companies from Asia were setting up shop in the UAE or in the GCC. We think these tariffs and this uncertainty will only add impetus to this growth and to this channel that was already underway anyways.
And what about on the streets of Dubai, Sharjah, the UAE? Things that matter to people, the cost of goods, going to the supermarket. You've talked about inflation there. Is there a risk that that trickles through to us?
I think what matters to people, to individuals on the street, are two factors, two things. First, inflation risk, as you've mentioned, and FX risk, because FX risk can then influence remittance flows for people who work abroad and have to remit flows back home. So to the extent that we need to identify FX risks within MENA, I think this is concentrated in Egypt. Egypt is vulnerable to global shocks. It is a carry trade, so foreign investment in Egypt is very large. And it's quite volatile, and it's prone to movements in the global markets, in the global economy. So we are starting to see the dollar to Egyptian pound already moving. Yesterday we saw a move. We saw higher interbank volumes, which means there's activity there. There's selling, foreign selling. So that's one risk to keep in mind in terms of the trajectory of dollar Egyptian pound. And then on inflation, we think really this is most inflationary for the US, not necessarily for the rest of the world. We're actually flagging deflation risk coming out of Asia and China as they try to cut their prices to transfer goods elsewhere. And these goods may be exported to this part of the world, and we might have some deflation being exported from China, in addition to the imported inflation from elsewhere. So it's really a little bit more nuanced, and the Middle East region is really in a more unique position compared to other regions.
Well, let's talk about those remittances. We look at the big trade corridor, it's UAE to India, but other big corridors are UAE to Pakistan, UAE to Philippines, going west towards Kenya and other parts of Africa as well. Is this a strong dollar environment or a weak dollar environment, Carla?
So yesterday did show a sell-off in the dollar. We did see the dollar react to the downside, which is quite surprising. Typically in these episodes, we would expect it to be a strong dollar climate. So we would expect to see some currencies, some local currencies depreciate against the dollar, specifically in Asia, to price in all of this uncertainty and the weakness we see there.
Looking at the dirham against the Indian rupee right now, if you're sending money back to India, you're going to get 23.5 Indian rupees at the moment. And we've got a quick word, Sheikh Hamdan heading to India today. That relationship, final thought on that?
Absolutely. We think the opportunities are with India and with China, and India with our growth forecast, with India growing in excess of 6% this year and next year. We definitely think there are plenty of opportunities there for integration.
Carla, great seeing you. Thanks very much indeed for joining us this morning. Good to have you in the studio again. The thoughts there of Carla Slim, economist with Standard Chartered Bank, specifically economist for the MENA in financial markets. This is the Business Breakfast.